Hey everybody, welcome back to the channel. China is going a little crazy right now in terms of what's going on with the US stocks, and I wanted to talk about it. I also wanted to talk about why Cathie Wood sold out of all of her Chinese stocks about a month and a half ago, and what's happened as of the course of last night. Today is Black Friday in the United States, so November 26th. What's happened as of the course of Thanksgiving night, which dropped stock futures massively because of what was going on and the sort of instability that it caused within the markets, kind of proves the concern for why she was right about this, and also what this says about the global macroeconomy and the innovation part of the economy. The reason I'm talking about Cathie here is because she owns a majority of innovation stocks. So what's the news that happened? Chinese regulators have pressed top executives of ride-hailing giant Didi Global to devise a plan to delist from the New York Stock Exchange due to concerns about data security. Okay, so let's break down what does that mean in a sentence. Didi Global is basically the Uber of China, and obviously China is a massive market, very big, right? Over 1 billion people, and they don't really want American companies taking over. That's why Google and Facebook and et cetera and YouTube don't actually have a presence in China because they're banned, right? So they have Chinese social networks. They have WeChat versus WhatsApp. They have Baidu versus Google, which I think encompasses part of YouTube in terms of their search. So, you know, we can go on the Chinese YouTube, the Chinese Google, whatever, but they can't go on ours, right? And that's a deliberate attempt by the government to make sure that American tech companies don't have control that is very vast in China, obviously, because China is a communist country and they don't want the free market enterprise of the West to be able to have too much control. Now, this matters because Beijing has asked this company that is publicly traded with American dollars to find a way to delist from the stock exchange, meaning this is a government telling a company that they don't want you to be publicly traded around the world anymore. They want you to stay in China. Why is that crazy? Well, that's showing the concerns that ultimately exist for what Cathie Wood was talking about a couple months ago, which is that the Chinese crackdowns in terms of governments and dealing with companies and sort of their stronghold over companies is getting to be a little bit too big, right? And a little bit too much. Now, what happened back in end of September is when the major Chinese sell-off happened. And this is where companies like JID and Baidu and Alibaba, that's the one I was thinking about. I was like, why can't I remember their names? Like, that's the big one. Went from highs of like 385. You thought they were on top of the world, right? You thought they were going to be like bigger than Amazon and just encompass the entire world's commerce, down to 130 as of today. And people at 170 were like, wow, this is an incredible buying opportunity for Alibaba. And now it's just going lower and lower and lower. Now I'm like, and I want to get into Alibaba, but I'm like 130. Like that's pretty expensive, or that's pretty cheap. But like now you're thinking like, is it potentially expensive, right? And the news that came out just last night is the reason I believe Cathie Wood dumped out all of her stocks back in September, October, because she was like, this is just not going to work anymore. When a government tells a company to basically delist from certain exchanges or do certain things that goes against the interests of the company, meaning the company wants to be publicly traded around the world because, especially in America, because there's a lot of American dollars, a lot of American hedge funds that would love to give money and make money off that stock, then that means the Chinese government, or that government in general, is cracking down, right? And when that government is cracking down, that means they're upholding and institutionalizing particular types of regulations and burdens that make it very difficult for the companies within the mainland country to not abide by those regulations. If anything, it makes it almost impossible to not abide by them, because if you don't, then they just shut down your entire business. This is the difference between sort of a democracy that values the free markets with limited regulations versus a more dictatorial regime that says that you have to do X, Y, Z or else you can't even operate anymore. So Cathie Wood, back in October, said, we had gotten into China because we saw the reaction to COVID. It was the most disciplined country in terms of monetary and fiscal policy during the crisis, and I thought China had the possibility of becoming the Germany and Switzerland of the world. So they got back into China around that time because they saw that, COVID is happening, but China's being really, strong on it. They're cracking down on it. They're making sure that there's no way they don't get out of this problem. And that gave a major opportunity for buying out certain companies, because those companies ultimately were going to perform and do very well. We do own some China in our few portfolios focused on autonomous technology and robotics, but we are very particular. They have to be low margin companies because margin is clearly not appreciated by the government anymore. They want common prosperity, right? So this is sort of her argument for why, margin is something that's actually puts you in a worse position if you're in China, because the government doesn't like you having margin, which is, not necessarily the best. Last weekend, the government went after the regulators who had focused on the financial industry as well as the financial institution. And so I'm just saying, wow, we're playing with fire. And this is why a lot of the dump came, right? When the government is going after financial institutions and the government is going after companies that are providing financial services and ultimately stopping them from linking on stock exchanges back in, this was either August or July, China stopped Ant Global, which was going to be a massive financial services company. This was going to be like a $35 or $38 billion IPO from actually happening because China was too concerned about these tech companies becoming too powerful. Jack Ma, which is the CEO of Alibaba, went missing after he gave a speech at some conference that had some anti-government sort of tenor to his speech, right? He said some things about the Chinese government that weren't necessarily favorable, and he went missing for a while and only recently came back into the public light. These are concerns that have all culminated into a lot of the Chinese sector going down, a lot of the Chinese sector selling off, particularly Cathie Wood, who manages billions of dollars of capital, dumping a lot of those stocks and only keeping stocks that are low margin so that they kind of stay under the radar from the government, which is kind of ridiculous when you think about it. And it's resulted in Didi Global, which is, as of last night, being asked to be delisted from the stock exchange. So in terms of Didi Global, let's talk a little bit more about what's going on from this. The Chinese government wants the ride-hailing giant to promise it would solve the delisting issue within a certain period of time. So that means that it's likely gonna happen. And the cyberspace regulator said, according to the person, the prerequisite for the relaunch of Didi's ride-hailing and other apps in China is that the company has agreed to delist from New York, which is insane, right? The government is like holding them here and basically saying that you have to get rid of it. Now, SoftBank Vision Fund owns about 21.5% of Didi. SoftBank, for you guys don't know, is like a $95 billion venture capital fund that has a ton of money that they invest in these public companies. And they have 12.8% in Uber and 6.8% in Tencent, which is another major Chinese media company. If the privatization proceeds, shareholders would likely be offered at least the $14 per share IPO price, so at least shareholders would get their money back. Since a lower offer so soon after the June offering could prompt lawsuits or shareholder resistance, the report said. So if they do delist from the stock exchange, they would try to give their shareholders the initial $14 that they paid ultimately for the price. Shares of Didi, which have fallen 42% since it went public in June, were down 6.3% at $7.60. This is just astonishing to me, right? And I think this ultimately proves why Cathie was right about selling out of a lot of those Chinese stocks, because you ultimately see the sector that is getting under a level of social unrest in regards to the fact that they have so much financial upside. You look at some of these companies like Alibaba and Didi. I mean, these companies are phenomenal companies. These companies are world-class companies that are likely going to be multi-billion and potentially reach the multi-trillion level market cap if you give them enough time to grow and prosper. And the Chinese government at this point, they just don't want that to happen, right? They don't want that to happen, particularly because they realize that if all that power becomes centralized within one entity, that might give that one entity too much control over the government, and then the government, which tries to make sure that there is common prosperity for all, would not have the leveraging power that they need to rein those countries under, or those companies under control. The company, Didi, also ran afoul of Chinese authorities when it pressed ahead with its New York listing, despite the regulators urging it to put a hold on it while a cybersecurity review of its data practices was conducted. So a lot of the regulators in China wanted to do more data practice reviews of Didi Global before going public. Obviously, Didi wanted to go public because they wanted the money from, the American investors. So there's always been a little bit of a conflict here. Now, what does this mean for the overall macro level economy? Well, number one, it means that Cathie was probably right for selling out of some of those stocks. That makes sense. Number two, it means I don't think she's likely going to be entering a lot of these stocks anytime sooner, simply because of the fact that she recognizes that they really are playing with fire here in terms of what else the government can do. What it means for you and me as an investor is I also think we need to follow that same approach, right? When you have a multi-billion-dollar sort of innovation fund saying we're not going to do these stocks, even though they're innovative, because of the governmental social unrest that exists within the environments in which these companies are originated. But I think that makes sense for us as investors to also think really twice about it. I mean, it's literally playing with fire because you don't know what's going to happen. You don't know if tomorrow the government gets up and they're like, hey, you guys can't operate here. And then, those countries, I keep saying countries. They're probably as big as countries, but those companies can't operate. In terms of Didi, what this showed last night is that there's probably a lot of unrest and shakeup to come within the markets, right? You think about a company like NEO. That's like it's not a meme stock, but it has heavy volume. I had money in NEO before. I actually bought it at 3 and sold at 6 like an idiot. But my mom, my sister have some money in NEO. I'm actually scared about that stock right now, right? Because it's at $39 and you're like, could it go to 15, 16 if the government just says hey, you don't don't want you to be in America anymore. You don't want you on the New York Stock Exchange. I don't know. These are really interesting concerns to think about. They are really interesting ways to conceptualize what the relationship is with China over the next couple of years. One interesting perspective here is that, China is a communist country, right? Or at least that's what they say they are. Socially, they are definitely more communist than they are more whatever you call it, liberal. And it seemed, or like progressive. And it seems like a lot of the reason they did what they did was to get this big. And then after they got this big, now they're reigning in that power, which is a really, really interesting concept to think about. Like they use capitalism, the free markets, to get as big as they can, get these markets to become as big. And now they're using their social power to rein back in these companies, which is something interesting to see over the next decade if that actually plays out long term in terms of their overall strategy for how the country is going to be positioning itself throughout the entire global economy. Really interesting stuff. Going to give you guys some more updates as I get more news about this China Didi stuff. Really interesting to see how this goes and it affects the markets when we actually open for full days of trading later. Yeah, thank you guys for watching. Interesting stuff. This is probably why Cathie Wood sold out. Probably why she was right. Daily business show. As always, I will see you guys on the next one. Bye.